Is this current AI boom the next dot-com crash waiting to happen? Or is it just the beginning of a technological revolution that will reshape the markets forever? As you know, investors are pouring billions into AI stocks and valuations are skyrocketing and speculative trading is at an all-time high. But if history has anything to teach us, it's that every boom has its tipping point. So in today's deep dive, I'm going to analyze the AI frenzy and compare it to the dot-com bubble, breaking down the key differences and examine the warning signs flashing across the market. I'll answer whether the crash is inevitable or are we witnessing the dawn of an unstoppable new era. So by the end of this podcast, you'll have a clear picture of what's really happening behind the AI hype, and most importantly, how to position yourself for what comes next. Now, I used a lot of AI research tools to compile this. I used data from the dot-com boom and bust, as well as valuations of companies then and valuations of companies now. So in essence, AI is now predicting whether the AI boom will crash.
Hey everyone, welcome back. Today we're tackling a question that's probably on a lot of people's minds these days.
Yeah.
Is all this AI hype we're seeing just another dot-com bubble waiting to pop? I mean, NVIDIA stock is going crazy. Startups are raising billions.
Yeah.
It all feels a little familiar, doesn't it?
It does, yeah. Feels very similar, but is it different this time?
That's the big question, right? And to help us figure that out, we've got this research paper by a guy named Cam, who's
Yeah, Cam is great.
kind of a legend, I guess you could say.
Yeah, he's got a ton of experience. He was at Goldman Sachs during the financial crisis, then went on to pioneer AI at JP Morgan. So
Wow.
he's seen a lot when it comes to markets going up and down.
So he was right there in the thick of it when the dot-com bubble blew up.
Oh, yeah, front row seat.
So what's he saying about AI now?
Well, he starts by taking us back to those crazy dot-com days, the late 90s, when any company with .com in its name was worth a fortune.
Right.
And the NASDAQ, the tech-heavy stock index, it shot up almost 800%.
800%.
Yeah, crazy, right? But then it crashed back down 78%.
Oh, man. My 401k still hasn't recovered from that.
I hear you. But that's the kind of volatility we're talking about.
Okay, but come on. Isn't AI different? It's actually changing the world. Not just selling pet food online like back in the dot-com days.
Right. But Kum's point is the market psychology, the way investors behave, it can be eerily similar.
Okay.
Back then, the NASDAQ's price-to-earnings ratio, that metric that tells you how much investors are paying for every dollar of earnings, it hit 200.
200. What does that even mean?
It means they were paying $200 for every dollar of actual earnings.
So basically way too much.
Way too much. Talk about irrational exuberance.
Irrational exuberance. Is that like a fancy Wall Street term?
It's basically when the hype gets so out of control that people stop thinking logically.
Ah, so like when you buy a lottery ticket, even though you know the odds are terrible.
Pretty much. And guess what? We're seeing echoes of that with AI today. There's this company, C3.ai. Their stock doubled just because their ticker symbol is AI.
You're kidding.
That's not investing. That's gambling on a letter combination.
So we've got sky-high valuations, people buying based on hype. Anything else screaming .com beja puk?
Oh, yeah, there's more.
Hit me with it.
Remember Pets.com, that company that sold pet supplies online?
Vaguely, they have that sock puppet mascot, right?
Yep, they spent millions on Super Bowl ads, but barely had any revenue to show for it.
Ouch.
And that's exactly what Com's warning us about, the disconnect between hype and reality.
Okay, I see where you're going with this. But what about companies like NVIDIA? They're the poster child for this whole AI boom.
Right, and their stock has skyrocketed almost 200% in just 6 months.
That's insane. Are they actually making enough money to justify that kind of growth?
That's the debate. Companies like Amazon during the dot-com era, as an example.
Okay.
Amazon went from $18 a share to $107, then crashed down to $7. So the question is NVIDIA on a similar trajectory, or is their AI dominance more sustainable?
Okay, you're trying to sweat a little bit here, but before we totally freak out, what are the specific red flags we should be looking for?
Well, Com says even though AI is driving real innovation this time around, some of those classic bubble warning signs are definitely there.
Like what?
First off, look at the sheer amount of money pouring into AI government investments, venture capital. It's creating an environment ripe for speculation.
Too much money chasing too few good ideas.
Exactly, and that usually doesn't end well.
What else? What else should we be wary of?
Keep an eye on the overall market sentiment, even the European Central Bank.
They're pretty conservative, right?
Yeah, not exactly known for being alarmist, but even they've expressed concern about an AI bubble.
That's not a good sign.
Nope, they're worried the market's getting too carried away with this handful of supposed AI winners.
So if those winners stumble, the whole market could fall apart.
That's the fear. And there's actually a specific event that Karm highlights in his paper that really illustrates this risk.
Okay, what happened?
Back in January 2025, this Chinese company, DeepSeek, they unveiled their DeepSeek R1 AI model.
DeepSeek R1, never heard of it.
Most people hadn't. It came out of nowhere, and it was offering advanced capabilities at a much lower cost than anything from the US.
Hold on, so the Chinese are already ahead of us in the AI race.
It was a wake-up call for a lot of people. Investors freaked out, fearing that US dominance was slipping.
And what happened to the markets?
Nvidia's stock plunged 17% in a single day.
17%.
Yeah, it wiped out $600 billion in market value.
600 billion, that's like the GDP of a small country?
It was the biggest one-day loss ever for a US company.
Okay, now I'm really starting to worry this whole AI bubble thing suddenly feels a lot more real.
It highlights how fragile things are, even for giants like Nvidia.
Yeah?
And it brings us back to that core question. Is this .com 2.0? Or is AI truly different this time around?
Well, I am officially on the edge of my seat. Let's dig into those different scenarios next. Just how bad could this get?
Let's do it.
Okay, so that DeepSeek story was pretty scary, but you mentioned that some experts are actually optimistic about AI.
Yeah.
Even with all these warning signs, how does that even make sense? Are they just delusional?
I wouldn't say delusional. Their argument is basically that AI is different from those .com websites.
Okay.
It's a much bigger deal, a fundamental technological shift.
But didn't people say the same thing about the internet back then?
They did, but the key difference this time is the players involved.
How so?
Back in the .com era, you had a bunch of startups with no real business models, just burning through cash.
Right.
This time around, the AI leaders are companies like Microsoft, Google, Amazon.
The big guys.
Exactly. These are companies with deep pockets, established businesses, and a track record of innovation.
So instead of wasting money on Super Bowl ads, they're actually using AI to improve their existing products.
Exactly. Think about Microsoft integrating AI into Office, Google using it to personalize search results, Amazon leveraging it for their logistics network.
Makes sense.
These are real-world applications that are already generating revenue and driving efficiency.
So it's not just hype, it's actually happening.
Right, and it's not just big tech either. We're seeing massive investments in AI infrastructure across all sorts of industries.
So there's real demand.
Yeah, it seems like companies and governments are pouring billions into AI because they see it as a game changer.
So the argument is, even if valuations are high right now, they're justified by the long-term growth potential of AI.
That's the bull case. And they also point out that valuations, while high, aren't quite as crazy as they were during the .com peak.
Interesting.
The S&P 500's price-to-earnings ratio is lower now than it was in 1999.
So maybe things are a little frothy, but not a full-blown bubble yet.
That's what they're saying, but even the most optimistic analysts admit that a correction is possible.
Of course, no market goes straight up forever.
Right, they're talking about a 10 or 20% dip here and there.
Just a little bump in the road.
They call it a rolling correction. Individual AI stocks might crash, but the broader market wouldn't necessarily collapse.
So kind of like a weeding out process. The weaker companies fail, but the strong ones survive.
Exactly. They point to what happened after the social media and mobile boom in the early 2010s.
Okay.
We had corrections in 2015 and 2018, but no 80% meltdown like the .com crash.
Right. Facebook and Apple did okay.
Exactly. So there is precedent for a tech boom that doesn't end in a disaster.
Okay. But we're still left with this big question mark hanging over AI.
I know.
It feels like a gamble. Do we ride this AI wave and risk getting wiped out? Or play it safe and potentially miss out on huge gains?
It's a tough call, and honestly, there's no easy answer.
I figured as much.
It all depends on your personal risk tolerance, your investment goals, and your time horizon.
So basically no one-size-fits-all solution.
Right, but the experts do outline different scenarios for how this could all play out.
Okay, give me the good, the bad, and the ugly. Help me understand what we might be in for.
All right, let's break it down.
Hit me with it.
The worst-case scenario is the full-blown bust, the .com crash replay, everything comes crashing down.
That sounds terrifying. How likely is that?
Hard to say for sure. Most analysts would put the odds at under 30%.
Okay, so not impossible, but not the most likely scenario either.
Right. Unlike those .com companies, a lot of these big AI players are actually profitable. They're not just burning through cash.
So they're less likely to go bankrupt if the market turns south.
Exactly. Plus, governments and central banks are much more aware of the risks this time around.
They don't want another 2000.
Exactly. They might step in with policies or stimulus to prevent a complete meltdown.
Okay, that's a bit reassuring. But what about the most likely scenario? What are the experts predicting will actually happen?
Most experts think the most probable outcome is a significant market correction.
Meaning?
A 20% or greater drop in the major tech indices.
Ouch.
Yeah, it wouldn't be fun, but it wouldn't be the end of the world either.
So a painful dip, but not a total collapse. What would trigger that?
Well, we've already talked about rising interest rates and inflation.
Right.
Those are bad news for any high-growth sector, including AI. If interest rates keep going up, investors might move their money into safer assets like bonds.
Which would take the wind out of tech stock sales.
Exactly. And then there's competition.
Ah, yes, the DeepSeek incident showed us that the U.S. doesn't have a monopoly on AI.
Right. The Chinese are catching up. And who knows who else is out there working on the next big thing.
So more competition means lower profits for everyone, which could lead to a reevaluation for those sky-high valuations.
Exactly. And let's not forget about regulation. Governments are starting to get serious about AI.
Yeah, all the ethical concerns and stuff.
Right. And new regulations often come with costs, which could impact AI companies' bottom lines.
Okay, so even in the correction scenario, things could get pretty rough. But what about the good scenario? Any chance this AI boom just keeps rolling along?
There's always a chance, but most experts would say it's less likely, maybe a 10 to 15% probability.
Okay.
In this scenario, the market gradually levels off, AI keeps growing, but at a slower, more sustainable pace.
So no dramatic crash, just a cooling off period as the hype dies down.
Right. And it's possible that AI really does live up to its potential.
Fingers crossed.
Maybe in a few years, we'll look back and say today's prices were a steal.
That would be nice. But it sounds like we need to be realistic and understand that there are risks involved.
Absolutely. The AI market is volatile and unpredictable. That's why it's so important to be prepared.
Okay, so how do we actually prepare for a potential AI market downturn? Give us the actionable steps. I think a lot of people are feeling a mix of excitement and anxiety right now.
I get it. Let's talk strategy, both for individual investors and for companies operating in the AI space.
Okay, so we've got like 3 possible scenarios, right? AI bubble explodes, market correction, gradual plateau. Kind of feels like those game shows where you pick a door and there's a chance you get slimed no matter what.
Yeah, kind of. But look, even with all this uncertainty, there are things we can do to make smart decisions. Let's start with some advice for our listeners out there, individual investors. Maybe you've got some AI stocks in your portfolio and you're starting to sweat after that last segment.
Yeah, because right now my gut is saying sell everything, but that's probably not the right move, is it?
Probably not. Panic selling rarely ends well.
Okay, so what should we do?
First, take a deep breath and remember investing 101. Don't let fear or greed control you.
Easier said than done sometimes.
I know. But seriously, before you do anything drastic, think about your investment goals, your risk tolerance, how long you plan to stay invested.
So like a little self-reflection before hitting that sell button.
Exactly. Ask yourself why you invested in AI in the first place. Was it a long-term bet on the technology, or were you just caught up in the hype?
FOMO is a powerful drug.
It is. And if that's what's driving your decisions, maybe it's time to reevaluate.
Okay, gut check our motivations. Got it. What's next?
Next, look at your portfolio. How much of it is actually in AI stocks? If it's a big chunk, you might want to diversify.
Don't put all your eggs in one basket, even if it's a really shiny AI-powered basket.
Exactly. Spread your risk across different sectors. Consider moving some of that money into index funds, value stocks, bonds. Create a safety net.
Like a financial airbag.
Exactly. Now, if you're determined to stay invested in AI, at least to some degree,
Which a lot of people are.
right, then you need to do your homework.
Due diligence.
Exactly. Look at the companies you're invested in. Forget the hype for a minute. Are they profitable? Do they have solid financials? Are they actually using AI to improve their business? Or are they just throwing around buzzwords?
Substance over hype.
Exactly. And don't be afraid to take some profits. If you've got an AI stock that's gone up a lot, consider selling at least a portion of it.
Lock in some gains.
Right. You'll be happy you did if there's a correction. And speaking of corrections, another important tip, especially in a volatile market like this, avoid leverage.
Leverage meaning.
Margin debt options, trying to juice your returns with borrowed money.
Yeah, those get-rich-quick schemes usually don't end well.
Nope. Stick to the fundamentals and finally be prepared. Mentally, market downturns happen. It's part of the cycle.
So don't panic.
Exactly. Have a plan, stick to it. And remember, long-term investing is a marathon, not a sprint. Okay, now let's switch gears and talk about companies that are actually operating in the AI space. What advice do you have for them?
Yeah, especially those that are seeing their valuations go through the roof right now.
It's easy to get caught up in the hype and think the party will never end.
Which is what happened to a lot of those dot-com companies.
Right. They overexpanded, overspent, assumed the good times would last forever. AI companies need to avoid that trap.
So no more lavish launch parties or Super Bowl ads?
Unless they can actually justify the expense.
Show me the money, not just the PowerPoint presentations.
Exactly. Investors are getting more sophisticated. They want to see results, not just promises.
Makes sense.
When the market turns, those with strong fundamentals will be the ones that survive. And communication is key.
Meaning?
Be transparent with investors. Explain your AI strategy, the challenges you're facing, how you plan to navigate a potential downturn.
Honesty and transparency over hype and empty promises, I like it.
It builds trust, and that's crucial when things get tough. And finally, focus on innovation. Build a real competitive advantage. If your AI is truly groundbreaking, protect it, patent it, make it indispensable.
Don't just be an AI company, be the AI company.
Now you're getting it. In the long run, the winners will be the ones creating real value, not just riding the hype wave. Those are the companies worth betting on, whether the market is booming or busting.
So is the AI boom a bubble? I still don't know. But the big lesson for me is that we can learn from the past. We don't have to repeat the mistakes of the dot-com era.
Absolutely. And remember, even if we do see a correction, it doesn't mean AI is a failure. This technology is still evolving, and it has the potential to change the world.
So keep your eyes on the prize, focus on the long term. And don't let fear or greed make decisions for you.
Couldn't have said it better myself. And one final thought. If you're really passionate about AI, don't just invest in it, engage with it, learn about the tech, explore its applications, be part of the conversation.
Because AI isn't just about making money, it's about shaping the future.
Exactly. And that's a future worth being a part of, no matter what the stock market is doing.
Couldn't agree more. That's all the time we have for today's deep dive. Thanks for joining us.
Thanks, everyone.
And as always, stay curious, stay informed, and stay ahead of the curve.